Hello, everybody. Welcome back to the Trading Room. I'm Shane Veneer. He's Nick Quinn. He's Connor Wood. We're doing a tri-stream here covering the Fed live. Will it be 50 basis points or 75 basis points? The jury's not quite in, but we think we have a pretty good beat on this release. I'm not expecting any surprises. I expect a confident Jay Powell to step into that room with a lot of swagger and a lot of ego. Nick, what do you think?
Yeah, I would tend to agree with you there, Shane. I think it's going to be an absolutely fascinating press conference, certainly more meaningful than the interest rate announcement. The market is looking for 50. The market is expecting 50. I can't see how Jerome Powell is going to be able to move away from that at the moment. I think that's going to be pretty much baked into the cake, so we'll obviously get that in a few minutes, but it is going to be that press conference that's going to be absolutely critical.
Yeah, just real quick, we want to give a big shout out to everybody on YouTube joining us live all around the world. Good morning, good afternoon, good evening. It's afternoon here, it's evening over there. Connor, what do you think going into this meeting? I mean, yesterday was the blockbuster with CPI. What do you have today?
Yeah, I mean fireworks yesterday, right? It was crazy. I can't see how we're going to have that sort of reaction going into just what the decision is and whether it's 50 or 75. We're 80% at 50, so I do believe it's going to be 50. But as we've said previously in the run up to this, it's going to be that language coming from the report and from the press conference. Is Powell going to come out? As he says, to walk in with a bit of confidence because of CPI, but it's still well over 3 times the Fed target. I wouldn't be too confident if I was him.
I mean, I got a question for you here, Connor. I mean, to be honest with you, this is, if you look at those inflation charts now, that's stepping down there, with the market reaction we had yesterday, that is the Santa rally. So my question is to you: is that are we actually going to get a Santa rally from here? Because the market certainly wants it, and the volatility we had yesterday, it was certainly looking to price it in.
Yeah, well, I think that the biggest threat to the markets that we had yesterday, of course, was that CPI figure, that dovish CPI figure. That's why stocks were gaining so much. But you can see that we pretty much we started to give it back already as we went into yesterday. So this is a market which I think is already overbought. It's already in overbought territory. It looks massively stretched. So I don't know whether, as we're going towards the end of the year, because people know what's coming in Q1, or they should know what's coming in Q1, and that's a bit of a storm. Then I do believe that Santa rally may be put off a little bit. I'm not sure on it. I do think obviously the markets are going to be less volatile, of course, and we could see general a broad-based rally in stocks. But how much higher can they go from here? I'm not really sure.
Exactly right. I mean, it's a fantastic question, the $1 trillion question, but the explosive yield environment that we've had in bonds this year. I mean, I every Wednesday for me, it's MBA 30-year mortgages. Right now, we're holding serve at about 6.42%, 6.41 last week. Do you guys have any input at all on really the yield situation, the long-term impact that the bond markets may have on what we're talking about, maybe a fleeting Santa rally?
Well, I don't think that they're going to like, the Federal Reserve is going to like the fact that the dollar's collapsing the way it is, or it certainly feels like it, and the way that those yields are rolling over. That's not really what they want. And bear in mind is that, it's only since March when, this is the chart that we got in front of us here, is the 5-year. It was the yield was at 2.64% yielding on the 5-year, and now we've got nearly a 50% retracement of that from the top, and there isn't much left for the Federal Reserve to do. So, the question now is like, where is the tightening going to come from? Jerome Powell has to maintain a hawkish tone to maintain that market confidence, and the CPI print pushing down to the downside, it gives them that credibility, but will they be able to actually hold a hawkish tone throughout the press conference?
Nick, I was going to say, right, remember back in June, I think it was, or maybe a little bit earlier, Jerome Powell said in his press conference that his preferred yield curve inversion, because as we know, the 2s and 10s yield curve has been inverted for a few months already, and that is the classic sign that the recession's coming. But Powell dismissed that, and he said that the preferred yield curve of 3-month and 18-month is the preferred way that he measures that recessionary scenario, and that is now just a few basis points away from inversion. In fact, the 6-month and the 12-month is already inverted now, and he said, quoted, "If it's inverted, that means the Federal Reserve is going to cut rates, and that means the economy is really weak." But he's not cutting, is he? He's still hiking. No. So he wants to cut, but he can't because inflation's so high. So the effects that this is having on the economy going forward, and those lagged effects that are going to be, coming to Q1 of next year, are going to be massive. And he's already gone back on his word there. So that's why I don't think he could be that confident. And he said on there after as well, just if that's the case, then that a recession is likely imminent if we're not already in one.
Well, so the
Oh,
question there is,
yeah.
then where is the pain going to come in the recession? Where is that in which sector are we really going to feel that the damage done by these hikes?
Well, I mean, the obvious answer is everybody's looking for a 20% pullback in real estate, U.S. real estate for
Yeah,
next
yeah.
year. We haven't quite seen it just yet, but sort of speaking to Connor's point about, well, okay, we're still hiking rates, we should be cutting rates. Take a look at the expectations for the February 2023 meeting right now. You're pricing a 60% chance of about a 4.5 to 4.75 interest rate here. After today's 50% or 50 basis point rate hike, that means that we're standing pat. So all of a sudden, we go from an ultra hawkish 2022 to maybe backing off into 2023. I see very, very uncertain times ahead of us for 2023. To answer your question, Nick, real estate, I think real estate
Yeah.
gets absolutely hammered next year.
Yeah, I think it's a very good point. That is that we can see on the chart in front of us. That is that Fed Watch tool. I know, Shane, you absolutely just glue yourself to this pretty much every day. For those that don't know what it was,
this week,
yeah, but for those that don't know what it is, just give us a quick rundown on exactly how that works.
yeah, those are just the derivatives traders trading their front month expectations for future meetings in the rate hikes. So when you see the odds come in at, say, for instance, that one right there, 80-20, essentially your futures traders and your long-term, your hedgers are really looking for a 50 basis point rate hike today, and that's what they're pricing. I always like to look as far down the road as I possibly can because I find that people that vote with their wallet mean it.
Yeah.
They come from an astute point of view. So that's one of my go-to tools. I always fall back to look for the smart money concepts. Nick, you follow the commitment of traders religiously. I mean,
I do.
the derivatives guys, when they show up with their wallets, you need to listen.
That's right. Yeah, it's because it's actionable data. It's people putting their real skin on the line. So when they've got an opinion, we definitely want to sort of tune into that. And that is a very clear opinion. Nearly 80% on the Fed Watch tool. So it looks like a 50 basis point hike is going to be in the offing. But I suppose in terms of markets, what for you guys, what are the key markets that you're looking for? For me, I'd want to be focused on the dollar. It'd be euro dollar for me. I'd be looking for downside in euro dollar. How about yourselves? What are the markets you'd be interested in for today?
I'll be looking at the S&P 500, right? I've been looking at indices, and Shane just mentioned a point there about that dovish pivot going into next year. Let's not forget the last 5 times the Federal Reserve has embarked on that dovish pivot. That's why we've had the biggest market crash. So anyone who thinks, just because the Federal Reserve having that dovish pivot, that means stocks up, that's not necessarily the case. During the global financial crisis and the dot-com bubble, when the Fed actually made that pivot, it was then after the stocks fell between 50 and 55% after that point. So I think there's pain to come. And looking at the S&P 500 chart, and you can see that yearly trend line, right? And I'm not a huge trader of trend lines, but when it's this clean, it's hard to ignore. And it's really, really nice. And it's been, we've had these bear market rallies along the way, strong 10, 15, 20% corrections along the way, classic bear market action. And you can see yesterday when we had that CPI spike, when everyone was buying stocks and we were going a bit higher, if you look where the S&P actually closed on the daily, it was below the trend line. It was below the 200-day moving average still after inflation falling or cooling, shall we say. So we're now still trading below that trend line, and we're looking to come for the retest now. So for me, I'm interested in selling around these levels, and I think there's a lot of room below. So.
Okay. Well, there's just a couple more minutes to go now. So Shane, quickly, any key market you want to look at?
You know what? I always lean on commodities. I think commodities really make the world go round. I think they tell us a lot about the situations that we're in, not only financially but also socially. And for me, I'm looking at crude oil very, very closely. 77.33, fairly bullish after a major build in supply today. We're also getting reports of maybe some pipeline outages here in the States that have driven prices. But in my firm belief, and these rate hikes are the only thing keeping crude oil in check. If in fact we do turn dovish in February, we're pricing springtime crude oil contracts already. Oh boy, I mean, I could definitely see a bullish market there for WTI crude. So I mean, if you wanted to bid it now, wait for a little bit better trade location, but not bad. And also gold, Nick. Looking at gold, 1809 on the spot market. Sort of a fascinating day, very, very tight. Connor and I were talking about this right before we got on, and you'll see the big CPI day and then the real compressed price action today. So I would be looking to buy pullbacks somewhere down around 1800 flat, and that's just a very basic trade.
Yeah.
Right, we got the squawk on. Not long to go now.
Come on.
I will shout the number out as soon as I hear it.
Good stuff.
20 seconds. Stand by, everyone. Good luck. 50. We got 50.
Wow, look at that reaction. Look at the S&P. Whew.
1799 prints for gold, spot gold. Crude oil comes off to 77. Wow.
What's that statement saying? Because the markets were expecting this. I'm thinking there's got to be some language in there in that statement. Stocks are bleeding.
Wow.
How's the dollar? Up.
Just checking. Should be going up.
390.
Yeah, big spike on the dollar index.
Yeah. Yep.
Big spike, instantaneous almost. Wow.
It's crazy this week.
That is a hawkish reaction. Boy, if we had some volatility. Big drop on gold, big spike down lower on gold, although that's retracing pretty much straight off the back of very quickly on that, on a 5 minute.
Yeah, I think you had a 1795 print down there somewhere.
Yeah.
Yeah.
Looking,
62% to the top side in the EURUSD long-term anchor point 107.48. Look for that tomorrow. You guys got ECB, SNB, ECB, and BOE. I mean, this is the murderer's row of central banking lineups for a 24-hour period. It really is.
They put the statement out as well. Just having a look at that, saying recent indicators point to a modest growth in spending and production. Job gains have been robust, is what we were talking about. That job market, unemployment remains low for now. Inflation remains elevated. They talk about Russia's war in Ukraine.
Is there anything new you pick out of that, Connor?
I'm looking, yeah. The committee anticipates the ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficient, restrictive to return to 2% over time. We've heard that before. They continue to monitor implications. Nothing particularly new there. It's a bit of a wishy-washy statement. There's not much clarity in there, to be honest. The committee is strongly committed to returning inflation to 2%.
There's a bit of hawkishness there, isn't there?
Stay the course. Absolutely right. We're not done yet. Our tools are working, and we're not done yet.
Yeah. I actually don't think that there's going to be they're going to do much deviation at all. I don't think they can, to be honest with you, like what Connor was saying before. And look, and the Nasdaq as well, pushing nearly 1.3%, pushed into the downside almost instantaneously. So it could be into quite a seismic down move, and it makes yesterday's massive volatility spike in the S&Ps yesterday look like nothing at all. If we get a massive push to the downside now over the next hour and a half, it could be quite a sizable move.
Absolutely. I mean, it's going to be all about tone and forward guidance. It always is, but this time, the last meeting out, Powell really talked in circles. I mean, he put on a clinic in banker speak. This time out, I think it's going to be a little more definitive. Connor, those are hawkish talking points. Committed. They wanted to stress they're committed to 2%. Yeah. Okay. Well, are we going up or down at the next meeting? Right now, we've already seen a reaction in the Fed watch, 35.8% now, looking for an additional rate hike there in February, another quarter point. So a fascinating game, and we're going to be talking a lot about that for the coming 8 weeks.
Inflation's cooling. That story's done. Inflation is cooling. Yeah. There's no doubt about it. So the markets have priced that in with that rally we've got. But it's not now important about, and I think Powell's going to say this, it's not important about whether inflation's cooling or not, because it is. But it's about where inflation falls to, where it starts to base out. If inflation bases out at something like 4%, that's really bad. That would be entrenched inflation, which is double the Fed's target.
Yeah,
it's going to be really detrimental to stocks.
It's easy to forget that, isn't it? It's double, yeah.
Yeah, it's just this was a hope rally. Sorry.
Yeah, I mean, we mentioned that yesterday with the CPI. We're all over it, and everybody's sort of, you got their pom-poms out and they're cheering. CNBC, if anybody watched it yesterday, I've never seen so many cheerleaders in my life. But see, everything's under control. I go, you're 3 times the target. You're 3 times the target.
Yeah.
So, sort of speaking to your point earlier, Nick, if they do pivot off of these rate hikes, is it open market operations? I mean, how do you keep shrinking that money supply moving forward if you're not going to hike interest rates?
That's the only thing that I can potentially think. If they've got a hold, because they can't keep hiking, but if they do have to hold a hawkish tone, which I think they do because they're kind of backed into a corner, I think the only way to do that is to start talking about more QT, more shrinking of the back end of the money supply. That's the only way. That's the only way you can be hawkish without actually sticking up interest rates in a more meaningful way. Because don't forget, we've just had. I mean, this is a hard full half point interest rate hike. We've had 4 75 basis point hikes in a row. You know, this is possibly like we'll never see this again in our entire lifetime. So we live in very, very, very interesting times.
Yeah, it's amazing how fast you get used to them.
Yeah, that's
really.
Well,
the markets price everything. We were used to.
Exactly.
We priced Russia, Ukraine in the first 4 weeks.
Exactly. So yeah. And the fact that the market wants to constantly get ahead of itself like this, I mean, the volatility that you're seeing off the back of these CPI prints, it just puts so much emphasis on them. I honestly, genuinely believe that CPI will become a more important number than non-farm payroll in January and February, simply by the fact that the market is leaning on it so heavily.
Agree 100%. All right, gentlemen, are there any other markets, any other levels, some good trades you have going on right now? Or are you just getting ready to buckle up, get out the popcorn, and take a look at Jay Powell and his tone? I can't wait to see his tie. I bet you it's purple. I'm telling you, it's not going to be red. It's not going to be blue.
We'll see.
He's going to walk right down the middle.
We'll see who wins the tie competition.
Should be a Christmas color.
Christmas color. There you go.
That'd be nice.
Maybe put some Santa Clauses on there.
Yeah, bit of glitter.
All right, gentlemen. Well, it's been absolutely my pleasure. It's a fantastic stream. It's always great to sort of chop up the markets and join you guys, get your thoughts on price action and really just the general state of things. So really, this is a blockbuster week. I know tomorrow you've got S&B, you've got BOE, you've got ECB. So I mean, no rest for the wicked. We're right back in the saddle here early tomorrow morning. So very much looking forward to that. We're going to cover the FOMC live here in about T-minus 15 minutes or so. I'll be back and we'll have the whole presser from top to bottom. Very much looking forward to the Q&A period. Very much. I think that's always the most fascinating. And we'll see if Steve Leisman and Greg Rabb are allowed back in the room. They weren't there last time. Those are sort of the veteran journalists. They got a young crew in there. So I'm looking forward to the tone. We'll see. All right, everybody joining us on YouTube, we sure appreciate your patronage. Everybody in the trading room, we're confident that you've nailed today's release and stacked your account with green pips. Until next time, trade the action well, and we'll talk soon. See ya.